Let's start off with Crypto Week and the passing of the Genius Act. So, David, can you tee this one up?
Yeah, so I guess I would start with 3 weeks ago, or no, I guess it's about 2 weeks ago. House Republican leaders declared that this week, the week of July 14th, was going to be Crypto Week. And I don't know, at the time and then leading up to the week, I thought that was kind of a bold move, maybe setting yourself up for failure. But they definitely, the Republicans, the House leadership, they definitely delivered, man. So all three pieces of the Crypto Week legislation agenda passed through the House. And as you said, the Genius Act is done with the House and the Senate. It's going to President Trump's desk Friday. I think he's expected to sign it Friday, but he might wait till Monday, but I expect he'll sign it on Friday. So then that's done. But there was also two other things that passed through the House: the Clarity Act, and then the Anti-CBDC Surveillance Act. So all three of those pieces went through. We can walk through each of those things now if you want, but if you have anything to say on the overview.
Yeah, so just the Genius Act will become law as soon as Trump signs it, while the other two still have to go through Senate. So not law.
Yeah, and they have varying degrees of work to do. The Clarity Act is a little further along than the Anti-CBDC bill, so I think the Clarity Act has some legislation already introduced into the Senate. It's going to go to the Senate floor and go through all the kind of archaic things that it needs to do to maybe eventually pass. But the anti-CBDC one doesn't even have legislation on the floor yet of the Senate. So it's much it has a lot more work to be done on it. And I guess I read somewhere that the Republicans are now expecting to introduce some initial kind of outline for what this legislation should look like soon. So much more work to be done on that. But
all right, well, let's dive into the Genius Act, the stablecoin thing. Yeah. What are some details of this?
Well, so I mean, as people probably know who are listening to this, it's basically the stablecoin bill, and it sets out kind of rules and regulation of what stablecoins will look like in the U.S., which basically means what stablecoins will look like everywhere in the world. Because what is it, like 99.9999% of stablecoins are U.S. dollar denominated stablecoins. So this really is kind of setting the stage for the rest of the world for what stablecoins will look like. Anyway,
and what will they look like?
They'll be these backed one-to-one stablecoins in dollars or dollar equivalents. So I think short-term sovereign bonds, U.S. sovereign bonds. I think they're going to have to be held with a certain regulated custodian, lots of regular audits, all those kinds of checks that the U.S. markets are known for. Again, this is really, really good stuff. The issuers of it have to follow a lot of different rules and regulations, and I think maybe the thing that is maybe most germane or controversial is who can do this, right? Who is going to have the ability to issue stablecoins, U.S. dollar denominated stablecoins, and there's this kind of there's language in there for basically you have to your main business has to be in finance, basically, right? Like, so you can't be a lingerie wrestling league and issue a stablecoin. Now, if you're a lingerie wrestling league, you can, of course, become a Bitcoin treasury company, but you're not going to be issuing a stablecoin. And so this has gotten a lot of pushback, concerns about offering unfair advantage to traditional financial players like JP Morgan and whatnot. I actually side with it. I think this is actually a good thing because it also hinders these mega companies like Amazon or Facebook from then stepping into this and then becoming these even bigger, more monopolistic companies, I think. And so overall, I think it's this little piece of the legislation is good. I don't know what you think about that.
Yeah, no, that makes sense. It should be noted, I think, that like it works both ways. So banks, like financial institutions, aren't allowed to start social media networks. They have very specific rules about what kind of business they're allowed to get involved in. So now with this legislation, it's sort of making some rules go the other way, where
right,
those social media companies, they're not allowed to get into this stablecoin business.
Right. And it should be noted, just for clarity, that what you're talking about is not in this bill. That predates this. And that's those are rules that are already on the books. And again, you can imagine in like the 80s and 90s or whenever it was passed, this is a good thing, right? Yeah, you're preventing these banks, and especially mega banks, from becoming even bigger by owning more of the stack, right? Like you could imagine them. I could have imagined them in like the 80s and 90s swallowing up retailers because why not provide goods and services and then all the way down the stack to payments and deposits and all that kind of stuff, and handle loans to businesses. Very fraught with kind of danger by picking winners and losers. So again, yeah. One thing that I wanted to ask you about, I haven't really formed an opinion. Well, I haven't formed a good opinion, I don't think, is do you think so this also favors apparently this Genius Act favors larger financial institutions than smaller ones, which will have a harder time issuing stablecoins, and thus again calls that this will be bad and help the already mega banks become even more mega.
Yeah, and that's what the consensus seems to be. This is good for the big banks, bad for small local banks who already are struggling. They don't offer the one thing they're good at is giving loans locally to people, but they don't offer you like anything on your deposits, and they won't be able to enter the stablecoin game here because they just don't have the scale to be able to do it, while the big banks will be able to do that, and so they'll be able to presumably like provide a better payments experience for their customers. It's going to mean more customers just putting more of their deposits with the big banks and less with the small local banks. So more pressure on smaller local banks, more opportunity for big banks.
Yeah, more consolidation.
So we're going to see more consolidation, it seems. Exactly.
But so do you think this is kind of a good thing or a bad thing?
It's good for consumers.
Yeah. Go ahead. Sorry.
Yeah. No, I don't really have a strong opinion. I don't really care about small local banks, I guess, in the US. I don't know. I mean,
well, there are studies that have shown that having a robust number of local banks actually really helps GDP, because these local banks, as you kind of alluded to earlier, they really know the local scene and are able to loan much better and with much more granularity than mega banks. And so you see, what is it, like an overwhelming percentage of GDP is actually represented by small to medium-sized businesses.
Yeah.
And those small to medium-sized businesses are best served by local banks who are just because they're local, are much better, better at.
They know the people in their area. They know what kind of business can succeed. They know the risk profile. Big banks don't have that insight, so they're probably like less likely to be able to give loans to people.
And they don't, and they just flat out don't,
level.
right?
Yeah.
They usually don't deal with smaller loans just because they don't bother with it. But overwhelmingly, GDP is represented by SMBs, small to medium-sized businesses, and you'd imagine that as these smaller banks get closed down or consolidated, this would hurt the economy, right? Because you lose that efficiency. At the same time, I mean, I agree with you though.
Concern. Yeah.
I agree with you though that, like, and I was it on podcast. Good Alexander, a great Twitter X follow, said that the thing that they don't do very well is maybe manage their balance sheet, especially when it comes to exposure to sovereign bonds. And the bigger banks, this is kind of their specialty, which makes sense. And
so maybe it's good for improving financial stability, not so good perhaps for GDP growth in general.
Yeah. So I mean, that's a concern there, and this has been a trend for hundreds of years, particularly in the past, I don't know, 100, is the number of local banks has fallen from something like, I think 100 years ago, it was like 4,000, something like that,
or
to
40,000,
something like that. Yeah. And it's now is it 4,000 now? I can't remember.
It's dropped by a lot. Yeah. Huge, like an order of magnitude.
Huge amounts. Yeah. So that's I would say the one thing to be concerned about. But as for stablecoins, this is just within this context. I do think it's probably the best way to do it. As in, the people who wrote the bill, they weren't like trying to be monopolistic or pander to or cater to lobbyists or something like that. This is probably the right way to architect stablecoin legislation.